Hello, everybody. This is Caleb Pearson here with Compass Financial Services. Thank you all for joining us today for the webinar on women in retirement. We will be discussing different retirement plan topics that relate specifically to women and how they look towards retirement and beyond. So our presentation today will be about 30 minutes long, and we'll have some question and answer at the end. You'll hear from Compass advisors Guy Lehman, Justin Van Houten, and Michelle Bjorkren, as well as a special guest from JP Morgan Asset Management, Dan Holtkamp. I do want to personally thank Dan for joining us today and for all of his support in our events like this. JP Morgan has always given us great insight and materials for events, educational events, and different work that we do in the office here, and we're very thankful for their support. As I mentioned, there will be a brief Q&A at the end. So if you have a question you'd like us to address, you can email it to me. My email address is at the bottom there, caleb.pearson@compassiowa.com, or you can just respond to the email that I sent you today with the link, or you can actually text it to us here at our office line, 515-327-1020. As I mentioned in the email I sent out, we will be recording this presentation. So if you need to hop off early, we'll send out a recording at the end. Feel free to share that recording with anyone you'd like. We'll also post it on our Facebook page so you can find it there. To get started here, I am required to read the following disclosures, which will show up on your screen there. Financial planning and investment advice is offered through Compass Financial Services, a registered investment advisor and separate entity from LPL Financial. Securities are offered through LPL Financial, member FINRA SIPC. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. No strategy assures success or protects against loss. Fun stuff. All right, moving on. We'll have Michelle get us started here, just kind of give us a brief overview of what we'll be discussing today. Take it away, Michelle.
Hi all. Hey, thanks for joining us today. So I'm super excited about this topic because I work with a lot of women and we talk about this stuff on a regular basis. And so my hope for you today is you may have heard some of this before and you may know some of these topics we're talking about, but my hope for you is that there's a nugget or two that you can take away from this and take into your own conversations about your future and your retirement. So we know retirement can be challenging, and the best approach, of course, maximize savings, manage spending, have a balanced approach to investing. Super simple, right? Not so much and not always. So we all have similar goals. We don't want to run out of money. We want to maintain our current lifestyle the way we become accustomed to. And of course, check things off our bucket list in retirement. And men and women, I've learned, have the similar goals, similar needs and wants, but I have learned working with women that they have a unique, and I'm not going to say challenging, but a unique viewpoint on retirement. So here's a few of the topics we're going to look at. So life expectancy, longevity. How the trend is that women do tend to live longer than men, and that can create some stress on future plans in your retirement. We'll talk about that. When we enter the workforce, when we choose to have a family, again, can impact those future years. What our earnings potential is, health care and caregiving. Caregiving is kind of something we want to emphasize because another trend is that women tend to be that caregiver, whether that be for a spouse or an aging parent, or maybe a child. We'll talk about Social Security benefits and some unique ways to look at those benefits from a spousal perspective, which you may not know. And of course, the basics, saving for retirement and managing volatility in the market. So with that, let's get started.
Great, thank you, Michelle. So first up, we're going to have Guy cover the topic of longevity and life expectancy for women. Guy, go ahead.
Yeah, great. So I'm going to talk a little bit about this chart. And as we see, women are the purple bar and men are the gray bar. And let's just focus on those two. And what this chart is showing us is if you're 65 years old today, this is the probability for men and women that they live to a specific age and beyond. And you see down at the bottom, 75, 80, 85 years, all the way up to 100. And at each age, you see the probability that women live to that age is higher, and sometimes significantly higher, than the probability of men moving to that age, living to that age. And let's talk about life expectancy in general. Remember, life expectancy is just an average number, which means half of the people don't make it to that age and half of the people live beyond that age. And the trend has been, for a long time now, people are living longer, and as time goes on, they will continue to. So since 1950, so the last 70 years, the US life expectancy grew from 68 years old to 78 years old. And in fact, a female being born today in the US will live on average 81 years. Now, if you have a female that's 65 years old today, on average, they will live to 86 years old. And as we go out on the spectrum of living longer, an extreme example is for those over 100. For every 100 women over 100, there's only 30 men. Okay, so we know this anecdotally because we know, right, our grandmother outlived our grandfather, but to put some numbers to it and to understand how meaningful it actually is. So the main point of this slide is that women do have a longer life, a measurably longer life. And in fact, there's an 80% chance that a woman will outlive her spouse.
Great, thanks, Guy. So moving on here, Michelle, we're going to talk a little bit more. We'll send it back to you a little bit more about what women do in their life. That's changed over the last 50 years. And one of the things is education and how many more women are getting educated in their lifetime. So Michelle, go ahead.
Thanks, Caleb. Yeah, women are making strides in education for sure. This slide in particular, the next few slides we'll talk about this, but this slide shows more and more women enrolling in post-secondary education, and that's just a fancy, fluffy term for college or universities. You can see the purple line is women, the gray line is men. You can see the trend here. And in 1990s, right about this intersection, women surpassing men earning advanced degrees, in turn, of course, allowing for greater earning potential. So the takeaway is women earn more degrees than men. An interesting statistic is in the class of 2013 to 2014, women earned 57% of bachelor degrees, 60% of master's degrees, and 52% of doctorate degrees. So overall, over half of all the professional degrees, which I'm sorry, is rock star. So this slide is a little busier, but I'll just point out the highlights. So stats show that the more educated the woman is, the more likely she is to wait to start a family. So, which makes sense because she's dedicating early years to her education. So this slide confirms, if you look at the master's degree line, you can see that 34% of women with master's degree tend to wait until ages 30 to 35 to start a family, versus somebody with a high school education, it's 11% in the same age category to start a family. That's significant. This slide is essentially just an extension of the last, but what this emphasizes is first-time moms. So more women over the age of 35 are becoming first-time mothers more than ever before. And this is the purple trend line that you can see here. The takeaway from all of these slides is that a large percentage of women are focused on getting their education before starting a family, which does impact, of course, their retirement years.
Great, thank you, Michelle. Moving on from that topic, we're going to be moving into the whole caretaking and long-term care planning that women have to deal with as they get later in years. And we're going to have Justin Van Houten cover that topic. Justin, go ahead.
Thanks, Caleb. And so what we're looking at here and what we're going to be talking about is how does long-term care planning and caregiving impact your retirement plan? And the top bars you see here, what that's showing you is the probability of people needing long-term care in retirement. You can see the green bar, 69% of people are going to need more than one type of care. And that could be something as simple as managing finances, help with medication, shopping, transportation. And then it goes into unpaid family care or home care where family or friends are able to help. And then it starts getting into areas of care where the costs are going to go up. And then if we look at the bottom chart here, this is looking at the duration of the care. And also now we're digging into the activities of daily living. So there's some more significant care needs there, may need help with eating, dressing, bathing, some of those areas that are going to require more attention and potentially more costs. There can be cognitive issues as well. And you can look at the different time periods. So the majority are going to need 90 days or less. And so that's something that can somewhat be managed by a family or a spouse. But as you get to the longer time periods, and the one that really jumps out is on the far right, the greater than 5 years of care, and specifically for women, because we already know that women on average will live longer than their spouse. So they can be in this position where they're requiring a more expensive form of long-term care, assisted living, nursing facilities, and assets, if not planned properly, could be depleting or depleted. And so there can be some issues there. So the takeaway from this slide is just simply that the majority of people do need long-term care, and it is something we want to plan for, and specifically for women. So it's something that you definitely want to talk with your advisor about as we start looking at your overall retirement plan. And so on this slide, Michelle also mentioned the cost of caregiving. And when we think about caregiving, it can be for a spouse, but it can also be for a parent. And the pie chart on the left shows that 2/3 of the caregiving population is women and about 1/3 is men. And how does that impact their finances in their working years and also in retirement? And you can see the charts here. And for women in this scenario, the gray bottom part is lost wages. So they could have lost wages equaling almost $143,000 over their career while they're providing care for loved ones. That also is now going to impact Social Security, which is the blue bar in the middle. And then also there could be a pension. And so for men, there are also some costs, but because 2/3 of the time it's the woman, these are things to think about as we start planning for retirement, what are income sources, and also how are we going to absorb these costs in a plan. And as we look at this graph on caregiving, we're going to break it down into specific areas and some of the ways that women are predominantly playing these roles. And so we have reduced work hours where women, 42% of them at some point in their career have reduced their work hours as opposed to 28% for men. Taking significant time off from work for caregiving, 39% for women, 24% for men. Quitting their job or leaving work, over 1/4 of women have done that for caregiving. So that kind of jumps out at you if you think about it. About 10% of men. And then also turning down a promotion, 13% of women and 10% of men. And so when you think about that, that can impact a career in a lot of ways, right? From your career progression to compensation. And more recently with COVID, that's also had an impact in these areas. So since COVID started, 2.5 million women have left the workforce, whether that's for caregiving, maybe it's for childcare, or when schools were closed. There's a number of reasons, but that's 43% more than men. So once again, women are kind of stepping up in a big way in these areas to help their family and their loved ones. And the one thing I will say that's encouraging that's going on right now is policymakers are starting to do more to support women and families. They are increasing affordable childcare and paid leave times, and they're pushing for that. Businesses and employers are also starting to step up, and they are promoting greater flexibility with work. And we've all seen that with COVID. There's a lot of different ways we can work They're adding leave time. And of course, equal pay is a huge issue, and that's something that hopefully continues to improve. And then also for investors, there's ways investors can help in this, or you can in your local community by supporting these businesses that are working to help women out in these areas.
Great, thank you, Justin. Moving on, we're going to have Michelle come back on and discuss a little bit more high level. You know, we've delved into some more specific things of some issues and things that come up for women, but broadening it out a little bit more and looking at different retirement things that women can do to prepare for retirement and beyond. So Michelle, go ahead.
Thanks, Caleb. Yeah, so the second half of our presentation, we're going to dive in a little bit more to specific to retirement. A few things we're going to talk about. One is focus on what you can control. Expect great, and I'm going to insert fun things in retirement, but we have to plan for them. So that's what financial planning and creating a game plan is all about. Because we know that life is not going to just be status quo. We're going to be thrown curveballs. And a financial plan kind of buffers some of those. So there is room to plan for retirement. Maximizing Social Security benefits, which we'll learn there are some unique ways to create spousal benefits you may not know about. Understanding and participating in the market. And ignoring the headlines and staying invested. So many of you work with financial professionals, and a lot of their job is to make sure that they are working to help you understand what your money needs to do for you and your goals in your future. No matter where you're hearing the current headlines, if it's the water cooler, CNN, Fox, the newspaper, your neighbor's family, it's our job as financial professionals to help get rid of some of that noise and help you understand what your portfolio is designed to do for you. And of course, to stay invested for the long haul. So here's a few things that we can look at for retirement. We are forced to navigate factors that we have varying levels of control of. So we're going to talk about a few. So in the upper left-hand corner, you're going to see some purple circles. These are things that we totally have control over. And totally is, I can use that term a little loosely, but for the most part, we have control over. One is saving and spending, very basic. How much am I saving? Am I saving enough in the right places? Above and beyond a cash reserve emergency fund, where's the next best place for me to put dollars? And then spending, knowing where your money's going every month. And, you know, financial advisors talk about this, tracking your expenses, knowing where your money's going, and more importantly, knowing what's left over at the end of each month, which helps answer the first question, is where's the best place for me to save excess dollars to impact my future? And then of course, asset allocation and location, which is just fancy terminology for how am I invested and what accounts am I using to get there? You know, asset allocation, am I diversified? Am I well balanced? Am I over balanced maybe in an employer company stock? And location, am I using the right vehicles, different IRAs, tax efficient investment accounts to make sure that in retirement, I'm doing the right things now. Things we have no control over, of course, market returns. That's an obvious one. Some people think they can time and control the markets, but we know that that's not true. And of course, future tax policy, legislative and regulatory reform, we have no control. We've got voting rights here in America, but of course we don't have ultimate control. Now we can make decisions in our portfolio based on what decisions are made on policy, but we don't have control over what decisions are actually made. And then we do have some level of control. In the blue circles, you see employment earnings. What do I want to earn? What are my goals? Do I, want that next promotion? What does my income salary need, or what do I want it to be? And then of course, how long do I want to work? And longevity. We have some control over that by taking care of ourselves and creating healthy habits in our life. The takeaway from this screen is to make the most of what you can control to create a solid retirement plan, but more importantly, or as important, I should say, is being aware of factors that are completely out of your control. Those are just as important.
Thank you, Michelle. Moving on here, we're going to talk a little bit more about Social Security and different claiming strategies, and we're going to have Guy cover that topic. So Guy, go ahead.
All right, thanks. Now, this is kind of a busy chart, so I just want to back it up a little bit, right? Social Security is the US's forced retirement program, right? Through your earning career, you are taxed on your income, and it goes into this program. And really, you have a few options when you hit retirement age. You can start taking the money anywhere from about 62 to age 70. And so if you take it right away, you'll get less money every month, but you'll get it for a longer period of time. If you wait till 70, you will get more money, but who knows how long you're going to live. This is especially important for women for 3 reasons. Social Security is a guaranteed income, guaranteed by the US government, right? Number 2, you can't outlive it. We talked earlier about living a long time. And one of the risks about living a long time is that you outlive your money. Well, you can't outlive Social Security. And also, there's some inflation protection. So as costs go up slowly over time, Social Security has a cost of living raise every year that can help keep pace a little bit with inflation. Now, we often get the question, how do I get the most? How do I maximize my Social Security benefit? And it's a very difficult, well, it's impossible to answer, because really our answer to you would be, when are you going to pass away? How long are you going to be here? Because if you knew that, you could make the exact right decision to get the last top dollar out of Social Security. Well, in our experience, we use Social Security as a tool to help make your plan work. Not with the goal of getting the top dollar out of Social Security, but again, really important. So Caleb, head to the next slide, and we're going to talk about the real 2 big special considerations that make Social Security such a big deal, in particular for women. There is something called a spousal benefit, right? Each person has their own earnings record throughout their working lifetime, and that goes as their record. Now, when you're married, you actually have access to your spouse's earning record too, and this is called a spousal benefit. And again, Caleb, I understand that we're going to send this, we're going to email this, these PowerPoint slides out after we're done, so you can look at this in detail. But spousal benefit is really benefits either a no income spouse or a low income spouse. So if you have somebody that has gone out and worked their whole career, and then the spouse has decided to stay home, take kids, and forego a career, that's really helpful for them, because they can get up to 50% of their spouse's full benefit, even if they don't have any. So spousal benefits, big deal. Down below in the green category is the survivor benefit. Okay, and this, after retirement, you can inherit basically the higher of your spouses. So let me back up. The widowed spouse. So if your spouse passes away, you can inherit theirs and take theirs if it's higher than yours. So, and that's not just for after retirement. It happens when you have minors under the age of 16. So survivor benefits are for those that lose a higher earning spouse, and they can inherit that in the future. And it's also for those that have minors in the household and are under retirement age. So there's a lot of benefits there. The main point of Social Security is there's some planning that goes around it, ask lots of questions, and there's a lot of rules. So you really need to get help, either from your advisor or the Social Security office surrounding this.
Thank you, Guy. moving on here, we're going to have Dan join us and talk a little bit about the investment side of things. So Dan, whenever you're ready, go ahead.
Great, thanks, Caleb. So now I'm going to talk a little bit about understanding and investing in the market. And I think just a couple things to consider. And we talked a lot about the fact that, women are living longer, which is great. The fact that women are more educated than they've ever been and are more involved in the workforce than they've ever been. But when it comes to making our money last, we have to get it to grow. And a recent study done by FINRA shows on the left-hand side, you can see the blue section is women, but about 70% of women today call themselves average risk investors or below average, or just more conservative. And so again, this is not for everybody, but on average, women tend to invest a little bit more conservatively than men, where only 50% of men call themselves average risk or more conservative than average. And while being more conservative isn't necessarily a bad thing, the challenge is if women are living longer and we need that money to last longer, having lower and smaller returns over the course of that longer life expectancy can have significant implications when it comes to what your nest egg is in retirement and beyond. So just something to be aware of. It's not a good thing or a bad thing, but I think just think about to yourself, are you a more conservative investor? Are you a little bit nervous around the markets? I think that's where having a financial plan and a friend or a colleague or a financial professional to help you navigate, some of those intricacies and complications when it comes to the market. So Caleb, if you turn to the next page, one way that a lot of financial planners, deal with, more conservative investors or helping them having a plan is at the top half of this page is goals-based wealth management, or sometimes people call it the bucket strategy. And so, many people are concerned about losing the money because they work so hard for that money. And, if the market goes down, you need it to spend or you need it to retire on. And so on the top left, that green circle is for short-term goals, maybe having 3 to 6 or maybe even 12 months or maybe even a little bit more in cash if you are that really conservative investor, that if for some reason the market did go down, you wouldn't have to change your standard of living or sell out of investments because you have that emergency fund or that cash reserve to live on. And then for those longer term goals or even medium term goals, blue is the equities or more aggressive investments. And so start adding more equities and more risky investments. And while those could go down, the longer the time horizon we have, the longer or the higher the probability that stocks will be positive in the future. And so I think one way to overcome that more conservative or nervousness about the market is, one, to have a plan, but two, think about different buckets for your money. And short-term buckets, more conservative, but longer-term buckets where you're not going to need that money for the next 5 to 15 plus years. I think having that plan to be able to take more risk, ultimately, you may have better results. And the final slide is just ignoring the headlines and staying invested. Think about over the last couple of years, it's been a crazy year with the pandemic, with COVID-19, one of the most contested elections that we've had in my lifetime. And there's been a lot of reasons to get out of the market. But the fact is, timing the market is nearly an impossible thing to do. It's a lot easier to stay invested. In fact, what this chart shows is over the last 20 years, the far left bar, you would invested $10,000 in the S&P 500, your money would more than quadrupled over that period of time, for a return of around 7.5% per year over the last 20 years. But over that 20-year period of time, roughly 5,000 days the stock market was opened. If you missed the 10 best days out of those 5,000 days, your return was cut by nearly half. Think about that. 10 days, the return is cut in half. Now, I know what some people are thinking as well. This is coming up, or the market's really high. It's not good days around the corner. It might be bad days. But the reality is, if you can see that box in the middle of the page, it says 7 of the 10 best days occur within 2 weeks of the 10 worst days. So if you ever heard the saying, it's darkest before the dawn, you get out thinking that it's really bad and things are really dark today. Oftentimes the sun rises the next day and all of a sudden, the dawn comes up. And I think last year was a perfect example of that. Last year, the second worst day of 2020 was March 12th. I think the S&P 500 that day was down 10% in a day. But immediately the next day on Monday when it opened, it was the second best day of the entire year. So if you would have gotten out thinking enough's enough, I can't handle this, the market's going to keep going down, and you missed that day on that Monday when the market opened back up, fortunately, you never make it up. And so the advice here is to ignore the headlines, stick to the plan, and ultimately stay invested.
Wonderful. Thank you, Dan, and thanks for joining us today. Michelle, why don't you go ahead and wrap things up? And if you guys do have questions, you can email them, like I said at the beginning, to that email address you see on the screen, or you can text them. I do have a couple of questions in here yet, but Michelle, why don't you go ahead and wrap things up before we get to the questions?
Thanks, everybody. Guys, Justin, Dan, Caleb, and Guy, this has been good. You know, the bottom line for today's presentation, number one, is women rock. Hello. But number two, you know, these issues have been around for a really long time. And the great news is there are more resources and solutions than ever before. So we encourage you all to meet with your financial professionals to have some of these conversations. If you don't have a relationship, pursue one. Get somebody who can come alongside you and answer some of these questions, but make sure some of these topics are part of your conversations as you're planning for your future. So thanks for joining us. And with that, we'll open it for some question and answer.
Great. Thanks, Michelle. And I'll start with you, actually, since I have you on right now. First question is, does your firm have resources to help us make Medicare or Social Security decisions?
We do. So we intentionally partner with folks in town that have similar viewpoints, similar cultures as us. And so we do have resources, independent resources, which is really important to mention, to help navigate the Medicare question. Typically it's 90 days out. You want to start pursuing some of that. But we do have people that will sit right here in our conference room and talk with you about that and help you make those decisions, as well as Social Security. We've got resources to help you figure out when's the best time to claim, how to navigate the spousal benefits if that's an option for you. But we definitely have resources in-house as well as outside partnerships that are independent that come in and help us make those decisions and make sure that they're the best decisions for you.
Wonderful. Thanks, Michelle. Guy, how about you take this next one here? Question is, should women keep finances separate from their spouse?
Yeah, great question. We see a lot of different things. Our experience is not whether they should be separate or together. That's ultimately up to you and your spouse. But what we really care to see is that people are paying attention. Most people with their finances are on autopilot. Just kind of, you know, one day to the next, money goes up, money goes out, down, it comes in, it goes out. And they're not paying attention. They're not knowing their numbers, like Michelle talked about to begin with. They don't know how much they're spending every month. They don't know how much they're bringing in, and they don't know if they have a surplus or a deficit. So that's really what's important in the whole managing money thing, is keeping track, knowing your numbers, paying attention. We've seen people be very successful having their money separate, right? The wife and the husband have their own separate accounts, and then they both contribute to a community account where they need to pay this and pay that and handle this and handle that. And we've also seen it very successful where people combine finances. So again, in our view, it's not separate versus combined. It's paying attention, being purposeful versus not.
This one is a little related as well, guys, so you can take it. My husband is interested in getting financial advice, interested, excuse me, but I am. Can I work with a financial advisor alone?
Yeah, that is a good question. Ideally, we like to see both people in the couple involved and interested. You can certainly get your own, come in and visit somebody and address the things on your mind, and then take them back and discuss them with your spouse. That's all. So I would say, to answer that, yes, you can seek advice out on your own. And hopefully that gives you some information and some confidence to go back to your spouse and say, okay, what do you think about doing this? This seems to make a lot of sense to me. Getting together on something and moving forward.
Great, thanks, Guy. And it looks like one more question, and Justin, I'll direct this to you because you were kind of talking about the long-term care planning. The question is, how does an age gap between spouses impact long-term care planning?
Sure. So great question. And this is an area where, depending on how wide the age gap is, no situation is the same. So you definitely want to solicit some help in this area, talk to your financial professional to get into that. But on a high level, say the woman in the relationship is younger, then once again, we know women are going to live longer. So you have a longer period of time that we're going to need to plan for and take into account, and specifically with long-term care and some of those costs we looked at. So that's definitely something where you want to get into the details of it. On the flip side of that, let's say that the man in the relationship is younger. Well, now those timelines start to compress a little bit and get a little closer. So that may actually allow for a little bit simpler plan because we're both on closer timelines, at least in terms of longevity. So, and one other thing to keep in mind with that, and it's kind of close to or related to the long-term care planning, is the broader estate planning. Because something that can happen is the spouse that outlives the other spouse, there can be a lot of costs that are eaten up with long-term care planning with the spouse that predeceases, and that can put the surviving spouse in a tough situation. And then there's a lot of rules around Medicaid and some of those areas. So that's something where we want to get into estate planning and look at all the assets and all the pieces and look at the long-term care options and put all that together for you comprehensively. And it's specific to each family.
Great. Thank you, Justin. And everybody, looks like there aren't any more questions. So thanks again for joining today. I will be sending out a recording and a copy of these slides to you all. So if you have questions, you can always send them our way or reach out to your advisor. And again, I want to thank Dan for being on today and helping support this event with the materials and speaking and all of that. So thanks everyone for joining. Have a good rest of your day.